Well, the headlines are that we're out of the recession, but I would advise to keep the champagne on ice. We just have to look at the problems with the Stats South Africa website yesterday morning as we were all eagerly awaiting the results. One couldn't log on to the website. Why? Because of dysfunction inside the State Information Technology Agency, which has been riddled with corruption. A rather ironic reminder that we are not yet out of the intensive care unit when it comes to having a very capable state. Well, my next guest is Maarten Ackerman, Chief Economist and Advisory Partner at Citadel. Maarten, I know economists can come up with 3 scenarios for every question. So what's the good, the bad and the ugly from these numbers? Let's start with the good.
Hi, Michael. Yes, I think the good is that 2.2 for the quarter is a solid, strong number and something that we needed at this point in time. I also think, after a very difficult year for consumers specifically, having a number like this going into Christmas, adding to that the cut in the zinc price, might just lift the mood a little bit, and that's something that we all can do with at this point in time. The other good on the story is the fact that the rating agencies said specifically that they're focusing on growth going forward, because if we can get these kind of numbers on a sustainable basis, then obviously we'll resolve a lot of the fiscal issues. So that's the good side of it.
The bad?
The bad side is that, we're still concerned that, there's a lot of base effect coming into play. So we're not really sure about the sustainability. If you think about the second biggest contributor was agriculture, coming off a very low base. But then if you add that the confidence indicators for agriculture that came out yesterday, that's very, very depressed. And if you look at activity at this point in time, the droughts, farmers planting less, still issues around uncertainty on land. You can't expect agriculture to continue contributing that positive going forward. The other bad is that, despite all the efforts to get foreign direct investments or any investments into the economy, gross fixed capital formation declined for another quarter. It was down 5%. And that's something that we need to actually make the numbers more sustainable. And then the last one on the bad side is that, despite this positive quarter, to get to the 0.7, which is currently the expectation for 2018, and the number that the Reserve Bank and Treasury uses for all their models, implies that we will need to have a very strong last quarter as well. And I'm not so sure about that. So I think there's probably downside risk for 2018 growth as we stand today.
Well, that sounds like the ugly to me. Was that the ugly, or is Eskom the ugly in all of this?
Eskom is definitely the ugly, in the sense that, that's not even in these numbers. If we get things right, if we get clarity around the land issue, the certainty around the election outcome next year, then there's a real chance that committed $50 billion so far that President Ramaphosa collected for the country will start to flow, and that will have a real impact on the economy. But that means that we need to have a proper electricity supply. So I'm not so sure at this point in time whether we can actually go at 3% given the constraints we've got on Eskom. I don't think Eskom is in a position to support an economy that's growing at 3%. So that is a major concern going forward, and something that we need to fix very, very soon.
What impact do you see that having on the President's investment drive? It wasn't too long ago that he was standing on stage with various business leaders, flashing very large numbers on the screen and trumpeting this as a huge success. The timing couldn't have been worse.
No, I agree with you. I think that my view is that we won't see any of that money until, like I've already said, we get clarity on property rights. Foreigners won't invest until that's clear. And we're so close to the elections, everyone will say, well, let's just see what the outcome is going to be. But now suddenly after, the investment summit, the Eskom thing popped up. And that's today, if you ask foreign investors, if you look at the OECD competitive index, what is the top 5 reasons why you don't invest in South Africa? Then Eskom is probably second in line, or electricity supply. So that's definitely going to be a headwind to actually attract that money in the end, although it's been pledged. But before that flows, there needs to be a turnaround in Eskom, not only in terms of the operation and the debt and running the company, but actually providing the electricity that we need.
Maarten Kingston just said that the time for a war room is over. That horse has bolted. We have the lead story in Business Day, quoting Job Mabuza, saying that there are three areas that need to be addressed in the turnaround strategy. Cost compression, which clearly means reducing headcount in one essence, increasing revenue as well, and this idea of shifting 100 billion rands worth of Eskom debt onto the government's balance sheet, read taxpayers, you and I. What impact will that have on our rating?
Yes, I think the biggest issue of all the state-owned enterprises now is probably not management anymore, because we replaced 6 of the 7. So we can start to address the mismanagement and the corruption. If you think about a unit like Eskom, or you think about a unit like SAA, if you strip out the debt and you've got the right management in place, they can actually be profitable. Because there is obviously demand for electricity. It's just we need to run it properly. And there's obviously demand for all the routes on SAA. Again, we just need to run it properly. But that brings us down to the elephant in the room, which is the debt. That's why it's very difficult for any private sector initiative to be willing to partner, because that will imply that they will need to take over part of the debt. So they will need to look at restructuring the debt, moving the debt to actually make it more attractive. Moving it to government, unfortunately, means that there's just a bigger burden from the fiscal side. And like you said, that means we will pay for that. And unfortunately, I think the rating agencies won't like that, because they already indicated that our biggest fiscal risk now is obviously getting growth. And second to that is the risk that one of these entities can actually go belly up.
Maarten, just quickly, could this trigger a rush by lenders to secure their position in the queue to have their debt to Eskom relieved?
Yeah, it might, but I think the market will probably set the price, and it will be determined by the market at this point in time.
That was Maarten Ackerman, the chief economist and advisory partner at Citadel, with his thoughts on that GDP beat and the ugly in all of that.